Let's talk about the deduction for charitable contributions. The Internal Revenue Code requires that for you to be able to deduct charitable contributions that several rules be met. The primary rule is that the charity must be an approved IRS charity. To be an approved IRS charity, that of course means it must be U.S. based and it must be formally approved. Meaning, for example, if you give money to an individual, including you drop it in a box at a corner, a homeless person, or directly to an individual in need, that is not considered a tax-deductible charitable contribution. It must be an approved United States charity by the Internal Revenue Service. This is sometimes called a 501c3 entity or a 501c4. Let's don't get into the tough stuff. It has to be an approved institutional charity for you to be able to deduct it, and it must be in the United States. Your deduction is generally limited to half of your income in a year. Now, don't worry, if you have a whole lot of deductions that you give away in 1 year and you make so little money that the deductions are more than half, we do get to carry them forward. There's your first set of rules. It must be an approved U.S. IRS approved charity, and you have to give it directly to the charity. What you give to a charity may be cash or goods or products or clothing, etc. Here are your basic other set of rules. If the dollar amount of what you are claiming as a deduction is less than $250, you have to have a receipt for what you have given them. That receipt could take the form of a canceled check, a note or letter from the charity, or an actual receipt in that case. If the dollar amount is $250 or more, all the way up to $5,000, you need more than a receipt. You need a receipt plus you need a letter from the charity that shows the date and specific dollar amount of those contributions that you've given of more than $250. That letter also has to say that no goods or services were received by you in return for the gift you gave. And finally, the letter must be dated no later than the day you file your tax return, all right? The rule actually says the earlier of the due date or filing date of your return. So, we've now learned to deduct charity, it has to be an approved United States charity, and the money must be given directly to them. Second, if the amount given is less than $250, you need a receipt. If it's more than $250 all the way up to $5,000, you need, in addition to the receipt, you also need a letter from the charity showing specific dates, amounts, and the fact that no goods or services were received by you in return, and you better have that letter in your possession by the time you file your tax return. If you give more than $5,000 to a charity, and it's something other than cash, you also have to have a signed special appraisal. Now, our last discussion point is, what if I give non-cash items to a charity? Things like clothing to Goodwill, household items, etc. If the total value of what you have given to a charity is more than $500 in non-cash form, then you also have to fill out IRS Form 8283, which gives specific information about who you gave stuff to, when you gave it, what you valued it at, how you bought it, when you bought it, how much you paid for it. In other words, it's rather detailed because there's been a fair amount of abuse on non-cash charitable contributions. The donations of a non-cash amount greater than $5,000 requires a significant signed appraisal by an approved IRS appraiser. Those are a special set of rules that we would advise you to talk to your specific tax advisor if you get into the non-cash amounts of greater than $5,000. As a 35-year experienced professional, one thing I don't like to see is non-cash contributions of more than $500 without some darn good records. So, my friends, this brings us near the conclusion of our charitable contribution discussion. Let's review the rules and see you again next time. Here are your rules. Must be an approved IRS United States charity. If it's $250 or less, you need a receipt. If it's $250 or more, you need a receipt and a letter from the charity. And if it's more than $5,000 and non-cash, you also need a signed appraisal. Please visit us again or call the office for additional questions or information needed on any of the points that I've raised here on our discussion about charitable contribution deductions. Thanks.